Using a seller credit properly can be a little tricky, but let's back up. What even is a seller credit? A seller credit is a credit from the seller. In a market where homes are having a little bit of difficulty selling, like the market that we're in right now, sellers will often give a credit to the buyers as an incentive rather than lowering the sales price. Builders often give seller credits in lieu of dropping their sales price. That way they can keep their sales prices high. This is also good for the buyer, as a seller credit can be more valuable than a price reduction, especially in a market like this. Let's take an average example and try not to throw up while looking at what we consider average now. The average sales price in Ada County is $500,000. Again, let's take some deep breaths because I don't think that number is going to go down very far anytime soon. Canyon County's average sales price is $400,000. That sounds a little more reasonable. Let's use that example. At a sales price of $400,000, the minimum down payment would be $14,000, and closing costs would be approximately $7,000. If you're a minimum down payment borrower, I would typically recommend we shoot for an FHA loan, but exceptions definitely apply. Your monthly payment in this scenario, with average interest rates of around 6.5%, would be about $3,000 a month. Now, if the seller is offering $15,000 off the sales price, this would reduce the amount of down payment that you have to bring in by $525, and it would reduce your monthly payment by $100. You would have to bring $21,000 to the closing table for down payment and closing costs. Of course, any down payment and monthly payment reduction is great for the buyer. I'm not going to argue that point, but I think that there's a better way to use these funds. If we instead used the $15,000 to cover the closing costs and permanently buy down the interest rate, we could save $225 a month, and you would only need to come in with $14,000 to close. I think that saving $7,000 at closing and $225 per month on the monthly payment is better than saving $525 at closing and getting $100 a month off of your payment. But that's just me. There are many ways to use a seller credit, including buying appliances, repairs, and in some loans you can even pay off personal debts like credit cards and cars. I recently had a loan with such a large credit we were able to stack buy downs. So they came in with a 3.5% interest rate and are saving $800 a month. And this is another selling point on working with a broker. We are able to be a personal consultant to our clients. A bank oftentimes doesn't have the time or manpower to work individually with each situation and give advice on how to use credits, for example. You can't usually text your bank at 7 p.m. saying, "Can we use part of our seller credit to buy a fridge?" and get a response listing out the pros and cons of that. So, I hope you learned something. Don't forget about the like and subscribe buttons, and I'll see you in the next one.